Boy, oh boy, there's a lot going on in the markets over the last few days that you need to be aware of as an investor. Doesn't matter if you're in the stock market, crypto, or both. This is going to affect everyone, even real estate investors. So right now what we're seeing is CPI data and PPI data came out. Numbers weren't good at all. We really were expecting this. We were expecting numbers that weren't good, but they were even worse than we were originally anticipated, as CPI came in at 8.2%, higher than the projected 8.1%. So not good. What does this mean, though? This means that in the upcoming meeting for the Federal Reserve, the FOMC meeting on November 1st and 2nd, that Jerome Powell is most definitely going to raise interest rates by at least 75 basis points. If we're looking at the data right now, the Fed futures rates, it's predicted that there's a 97% chance that we see a 75 basis point rate hike. Do I think it's going to be 100? No. They've pretty consistently said that it's going to be around 75 basis points. They've never indicated they're going to go any higher, but that would be a major shock if they were. So really what we're expecting is another 75 basis points. In addition to this, we have already seen that a number of the major banks have come out with earnings, and a lot of them actually beat on earnings expectations. We saw how JP Morgan and Chase beat Wall Street expectations. Wells Fargo beat on earnings and revenue in their last quarter. Citigroup beat on revenue and earnings in the last quarter, and Morgan Stanley did pretty well also. So all across the board, banks are still performing well, and many people are projecting that things are going to get worse for banks over the coming weeks. But what we need to know as investors is that, look, Federal Reserve has their upcoming meeting. In this meeting, we are guaranteed to see a rate hike. Is it going to be 75 basis points? Is it going to be even 100? Well, probably not, but definitely at least 75. Now, if you're a crypto investor, there's also a few things we need to be aware of. So right now with Bitcoin, there are 2 or 3 main indicators that are very bullish. We haven't seen these in a long time. Last time we saw this was in 2015 and 2019 at the bottom of the bear market. So really when prices were at their lowest, right before we saw a rally. I wanted to quickly interrupt today's video to bring you a word from our channel partner, Centurion Invest. Centurion Invest is a crypto ecosystem that offers trading through its exchange, and they also just recently launched their exclusive global Visa debit card. The cool thing about Centurion Invest's platform is that they are one of the fastest growing exchanges in the market, and they also just recently launched their native token CIEX on October 4th, 2022 to enable their community to get involved and profit from their ecosystem growth that they've seen as of recently. CIEX is Centurion's native utility token and is an integral part of the Centurion Invest ecosystem. It ultimately allows users to save money and access numerous benefits and perks within both the CI wallet and the CI exchange. Since CIEX is the fuel of the Centurion Invest ecosystem, that ultimately means that the CI platform, CI exchange, and future products like CI Launchpad, which will be coming out soon, will make heavy use of incorporating the token into operations, and this ultimately allows you to have multiple ways to profit from it, like priority access to the upcoming CI Launchpad, 20% trading fee discount when paying fees with CIEX, and a wide range of additional perks and rewards. AB Group joint venture with Centurion & Co. to empower ABC Exchange Turkey to become the leader in the region with the blessing of Muhsin Bayrak, who's a billionaire and philanthropist. So this platform is definitely worth checking out, in my opinion, as it's been growing very rapidly, and they just recently had their token launch. So use my link in the description and check out Centurion Invest today. But let's get back to the program. What we're seeing right now is the first indicator is Bitcoin accumulation. What we can see is that Bitcoin accumulation has hit a 7-year high, which is in line with the bottom for 2015 and 2017. And this is extremely bullish. While we can't base everything on the past, because 2015, 2019 were very different economic environments. We didn't have interest rates sky high. We didn't have all this intervention from the Federal Reserve. But while that is true, we still need to look at this at least and be aware of the fact that right now, Bitcoin on this indicator is at 74%. And what this indicator right here is the Bitcoin realized cap. So essentially what it's saying is that over the last 6 months, so this chart shows over 6 months old, unmoved Bitcoins take up 74% of the market cap in terms of P&L realization. Basically saying that a lot of people haven't really sold in the last 6 to 12 months. In addition to this, this is what we saw in line with the previous bear markets at the bottom. That's a good thing. Other thing that we're seeing is with Glassnode recently reported how we have seen the number of addresses holding at least 0.1 Bitcoins has consistently increased and just reached a new record high. They just reached a new record high of 3 million and like 3.82 million wallets holding at least 0.1 Bitcoin. This is a lot easier for people to do, to accumulate at least 0.1 Bitcoin during a bear market because prices are down significantly. But either way, what this shows us is that new people are still interested in getting into the market for Bitcoin. We're seeing that consistently new wallets are being formed. More people are buying small amounts of Bitcoin, and this is a bullish sign. You got to remember, more people buying Bitcoin is simply supply and demand. If these people are planning on holding it long term, well, just takes much of that supply out of active supply, makes it so prices are going to rise simply because of supply and demand. But either way, it's nice to see that we're continuing to see accumulation even when prices have been falling. And the last thing I want to go over is pretty major news coming out of Metamask. So Metamask just reported they have officially allowed and integrated instant bank to crypto transfers. This is a big deal because MetaMask has over 30 million users, and with 30 million users, they can easily now use their US bank accounts to fund their MetaMask wallets. Previously, it wasn't that easy to do. Previously, you had to buy crypto on another platform, potentially send it over, or have crypto already on another platform, move it over to MetaMask, or you could have used Apple Pay, but there were limits. Now that's not an issue. If you're looking at this video right here, we can see that with this video, there are, when you click on buy crypto, there's a new option now where you can actually have instant bank transfer. You can see right there. Instant bank transfer, Apple Pay, debit or credit card, and bank account. But instant bank transfer is the highest limit, meaning you can buy the most crypto out of all their other options, and it is easy to do. Whether you have any bank, it's very easy to do. So that is a big deal for crypto because we're seeing how more traditional financial services are being integrated with crypto. We're seeing them have a better relationship than they used to have. We're seeing a lot more banks and crypto exchanges and crypto firms and wallets working a lot more together, realizing the benefit of it. So ultimately, that's what's going on right now with crypto and stocks. If you're an investor, keep an eye out on the Federal Reserve meeting November 1st and November 2nd. Between now and then, not much is happening in terms of overall macroeconomic events. We've already seen CPI data. We've already seen PPI reports. So right now, we're just waiting for that November 1st and November 2nd meeting where Jerome Powell is going to say exactly how much they are raising interest rates by.